Hey everybody, I just wanted to share with you a little bit about how we use a worksheet in accounting. Again, in the modern world, much of this work is done by accounting software, but a worksheet is a really nice tool that helps us put everything in one place. And so what I have up on the screen is a worksheet. And so I just want to kind of talk through each of the sections. So the green section has the account name and the account number. So the number and then the name actually, and then the unadjusted trial balance. And all the unadjusted trial balance is the balance of all of the accounts before any adjustments. And so you can see all those balances are there. You'll see that the accounts are listed in a specific order. It starts with assets, and then liabilities, and then equity accounts, then revenue accounts, and then expense accounts, which is how all trial balances are set up. And so the worksheet just is like a trial balance, but then in the next column, the yellow column, we can put our adjustments straight into the worksheet. And so any adjusting entries we made, we would just enter right in there. So you can see this company has adjustment A was a debit to insurance expense and a credit to prepaid insurance. So that would have been the adjustment they made when they recognized the expense for a portion of their prepaid insurance, and so forth. So it just has the debit and credit entries for each of the adjustments here in these columns. The next column, which they have blue on here, is the adjusted trial balance. So it would just be the balance and then any adjustment. And so in this case, we had an adjustment of 4275. I'm sorry, an unadjusted trial balance of 4275. And then no adjustment, and an adjusted balance would still be 4275 because there was no change. This is a little different for the second one, accounts receivable, where there was no balance on the unadjusted trial balance, a debit balance of 1800, which then leads to an adjusted trial balance of 1800. Supplies had a debit balance, a credit adjustment, meaning they used up some supplies. And so we can see that the new balance is the debit balance minus the adjustment. So a debit of 8,670 and so forth. So we just take the unadjusted balance, adjust it for the adjustments, and then we'll have the adjusted trial balance. And then in these last columns, what we'll do is carry over the balances that apply to those financial statements. And so for the income statement, it'll be the revenue accounts and the expense accounts. Those are the ones that are going to be part of the income statement. We'll see when we total those two up, they don't match. Everything else, the debits and credits match, but in this case, they don't. And the reason for that is, well, we had more revenue than we had expenses. And so if we had $8,150 in revenue and $4,365 in expenses, the difference between those two is our net income. So we'll enter that right here and then add those together, and you'll see now that our debits and credits balance. Now that addition to net income we know is going to eventually carry over into our equity. So since we debited here, we're going to credit over here on the balance sheet. So again, we'll move over each of the columns that represent balance sheet accounts, assets, the accumulated depreciation, liabilities, and any capital or withdrawals. We'll add those two up, they won't balance. And so the difference will be the amount of net income. So you'll see the net income gets debited to the income statement and credited to the balance sheet on the statement or on the worksheet here. And then those two will balance. What's nice about this tool is once you've completely filled it out, now it's super easy to just create your income statement because you have your revenues and your expenses all summarized, and your balance sheet because you have your assets, liabilities, and equity, and then your statement of stockholder, or not stockholder, sorry, but owner's equity. So that's how we use a worksheet and how we fill one out. And I hope that's useful to you.